But let's just go next door to Uganda, where the diasporans, the Ugandans in diaspora, sent home an estimated $1.5 billion last year, and that's about 13.4% increase over the 2023 remittance figure of $1.24 billion US dollars. Earlier today, hundreds of bankers, officials of the central bank, and other financial market professionals gathered for the annual conference of the country's Bankers Association. Now, that summit was focused on the role that diaspora remittances play in the Ugandan economy and how to further ease money transfer transactions to make that pile of remittances bigger in President Yoweri Museveni's economy. Let's take a listen.
Consumer protection and facilitate the seamless flow of remittances. We have already made significant strides, including the enactment of the National Payments Act 2020, which has enabled interoperability across banks, mobile money, and fintech platforms. As a result, formal remittances has increased, with 76.9% of the recipients in 2023 using regulated channels, where 45% use mobile money, 18.2% use banks, 12.3% used money transfer operators. We also have seen digital apps like World Remit, SendWave, and Cheaper Cash, which have made international transfers faster, safer, and more affordable. We are actively enhancing the payments infrastructure with the focus on upgrading the real-time gross settlement system, RTGS, and the East African Payment System, EAPS. A key part of this initiative is the transition into ISO 20022 messaging standard, which enables richer data to exchange to improve transparency in cross-border transactions and reinforcing the global AML CFT compliance. In parallel, we are advancing the development of the national payment switch to facilitate seamless real-time transactions among banks, mobile money operators, and other financial service providers. While there have been delays in implementing the switch, these are being addressed through active government engagement to resolve critical bottlenecks. Collectively, these efforts are expected to significantly enhance the efficiency of both domestic and international remittances. Currently, many remittances transactions pass through multiple intermediaries, such as correspondent banks and global money transfer operators, which increase the cost for end users. The national payment switch will eliminate these bottlenecks by enabling a more direct, efficient fund transfer that is expected to result. Furthermore, by connecting into regional payment platforms, the switch can support cross-border transfers in the EAC partner states' currencies, reducing the foreign exchange conversion fees and improving settlement timelines. The shared infrastructure promotes competition and cost efficiency, while centralized oversight by the Bank of Uganda ensures pricing is transparent and consumer protection is effective. We are also intensifying our efforts to lower transaction fees. The Bank of Uganda has continued to promote dialogue between commercial banks and the payment service providers and about the high transaction costs. With the support of the Ugandan Bankers Association, the Payment Service Providers Association, these engagements are expected to be reinforced by the proposed fair competition regulation under the National Competitions Act, which seeks to strengthen our efforts to establish a fairer playing field within the payments ecosystem. This is designed to promote innovation, democratize access to payment services, and ultimately drive down transaction costs for the end user. We have also initiated a review of the national payment systems regulatory framework with the proposed amendments to include, among others, the repurposing of interest earned on trust account as a mechanism to reduce or subsidize transaction fees. Furthermore, we are strengthening our data systems, and thank you to IFAT, and we are enhancing our data systems to collect high frequency, more detailed and disaggregated remittances information by gender, region, channel, purpose, and cost. This entails expanding the remittances reporting framework to include credit institutions, microfinance deposit-taking institutions, payment service providers, and fintechs. The revised remittances reporting form has already been disseminated to all the remittances service providers for implementation. We believe that this granular data will inform more evidence-based policy making and oversight, enabling targeted reforms to reduce costs and improve access. We are also implementing the data warehouse architecture, which will involve replicating mobile money data at the Bank of Uganda, as well as sub-tech projects to support these efforts. Finally, we will continue mitigating cybersecurity and digital fraud risks. The Bank of Uganda has implemented several comprehensive measures to address emerging operation risks and cybersecurity threats among payment service providers, including issuance of cybersecurity guidelines, enforcement of annual systems audits, and periodic system vulnerability assessments, introducing pre-licensing system vulnerability assessments, issuance of guidance on KYCs for payment system providers and their agents, and also financial reporting and external audit appointment guidelines. Our public awareness campaigns on digital literacy and fraud awareness as part of our national financial inclusion strategy initiatives have been mentioned here. To ensure that the system remains secure, industry stakeholders in Uganda's remittance ecosystem should actively participate in the financial sector anti-fraud consortium through information sharing, promoting digital literacy, and raising consumer awareness campaigns. It's also critical to maintain robust cybersecurity frameworks, conduct regular system audits, and continually upgrade infrastructure. So, what's our shared vision for prosperity and a quality future? I'll want to conclude with a clear call for actions for transforming Uganda's remittance landscape. To fully realize the potential of remittance as drivers of long-term growth, we must advance digital transformation, reduce transaction costs, and promote inclusive policy through strong institutional collaboration. And therefore, this leads me to the priorities. One, we need to enhance transparency. Beyond our revised reporting frameworks, we need rigorous diagnostic assessments of pricing structures across all digital financial services to advance fair pricing.